So Mr. Bogdan has released a new bot. This one's the Quantum Baron. He's probably the most famous and one of the most successful developers in the whole EA world. So I'm really excited to dive in and see if this one is going to be just as good as some of his previous bots. This video is sponsored by our free Golden Time Bomb Expert Advisor. Take your trading to the next level through automating the London breakout and the opening range breakout. Click the link in the description to download the EA completely for free. So it's really interesting because you don't see many oil bots on the market. And I've personally tried to develop EAs for oil as well, and it's pretty tough. Just because oil does not usually have these long trending periods over a super extended period of time. You tend to see lots of more mean reverting price action because energy prices tend to be rather cyclical. So I'm really excited to dive in to see if this is a real EA, if it's a stable EA, because Bogdan tends to like grids, and whether or not this could be a good addition to a portfolio. So the good thing about Bogdan is he's always very honest that his bots are grids. Many developers try to hide them or try and use some fancy terminology to kind of mask the true strategy. But Bogdan's bots, like if you like grid martingales or not, he usually tells you that like, hey, these are grid martingales. And of the grid martingale developers, he's one of the better ones. Occasionally the bots do blow up, but they don't blow up that often. Whereas you have less experienced developers who also make grid martingales and they don't really know what they're doing, then those bots tend to be very frequent ticking time bombs. Like his famous bot, the Quantum Emperor, it has gotten pretty close to blowing a time or two, but it's also gone in extended periods of time being reasonably stable. So depending on your personal risk preferences and if you're using equity stop losses to protect against that blowing up, it is a valid potentially style. Just you should be aware of the risks involved. And here essentially is saying that this is a long only bot and is taking advantage of oil's natural bullish cycles. And it's also trading more of a grid style system, and you require a pretty significant $5,000 minimum balance. And it's quite interesting actually. One thing that I would note here is oil is not necessarily always bullish. Like if you look at oil over large periods of time, and you know what, let's just pull up a chart to make it nice and easy. And let me see USO, USD, and let's pull up the 8-cap one, and hopefully that works. Yep, there we go. And let me just search up here so I can show you guys USO, USD. There we go, perfect. And what I want to show you is that that's not exactly true. And the reason why this bot is potentially dangerous is because oil doesn't necessarily always go up. If you were to compare this oil chart versus, for instance, more of an equities chart, you would see with equities you have these nice smooth lines up. So clearly taking more of a long bias does make sense. Oil, however, tends to be fairly cyclical. You could argue that over time energy costs should go up, but I actually did part of a master's in energy markets, so I'm reasonably familiar with this. And my understanding, at least what I learned from my various professors, was that with oil and with most energy commodities, or many commodities in general, there's an inverse relationship between production, or like usually when production is low, prices are going to be quite high. And this is just simply supply and demand, right? And effectively what happens is in any sort of energy market, particularly with oil, like there's different marginal costs of production in different oil fields. I know this well as a Canadian because our oil here is quite expensive to produce. So what will happen is oil prices will generally speaking get quite high, and then lots of other fields will all of a sudden become economically viable. What will happen in this case is, let's say the Canadians start producing oil because our cost of production is much higher than, for instance, Saudi Arabia. And then we and many other high cost production regions will all of a sudden flood the market. And then there's just way too much oil, and then oil prices tend to collapse. And then naturally what happens when oil prices collapse, the Canadian fields are no longer economically viable because our cost of production is higher. So then those fields come offline, supply shrinks, and then there's less supply, and oil becomes more expensive again because demand is still increasing, if not relatively higher. So then oil prices go back up. So all of this to say is that energy prices and commodity prices, most of them tend to be pretty cyclical. And this is simply because of that natural boom and bust nature of more production coming online and like merit order curves of production costs. So what Bogdan is saying isn't exactly true, because as we can see here, for instance, in the pandemic, oil briefly went negative because there was way too much of it. So had you been running this bot, a grid martingale style of long only, during one of these periods right here, and I remember this crash very fondly, or not fondly, unfondly, because everybody's dads all of a sudden were unemployed, this can be no bueno. So you have to be really careful about that. Now, oil is still in a reasonably low spot, but at the same time, the fact that the US has a big mandate to just pump out as much production as possible doesn't necessarily equate that we're going to be entering more of a bullish period. Anyway, I digress from my lesson in energy markets today, but effectively what Bogdan is saying is we're only going long because oil is a long-only asset. That's not true, because with equities, you can say that ETFs, as long as the economy of a market is growing, they should generally go up. However, with oil, you can't say that. So let's dive into MetaTrader now, or first let's dive into the signal actually, to see how performance has been so far. We can see that performance has obviously been very high, but he has been getting a bit creative here with like deposits and starting off super low and then using a ton of risk and then adding more money, which is why we're getting such a massive return here. But regardless, just take it with a grain of salt. It is profitable. It has yet to blow up. But because his initial deposit was $100 before then depositing 1.4 grand, most likely he had a bunch of little accounts which he rapidly grew to something big and then put more money into. So just be mindful of that. But it's on a real broker. So far it's reasonably stable, so good to go there. And if we look here, it is a classic grid system. I ran it on the M30 on USO/USD. One thing to note is in the inputs tab, you have to make it match your broker's symbol. And it is very clearly a grid, right? So it's a long only grid and they're all closing at certain times. And yeah, it's a pretty generic grid-based system. Has yet to blow up. But one thing to note is you have to be really, really careful because oil can have downtrends. And although this is largely buying on pullbacks and Bogdan does make very good grids, if we were to run this in a very bearish period, likely it would not survive. So obviously, like, this is hindsight is 2020. But let's say, for instance, we were to run this here on a 1 year period. And as you can see, it would have blown up, right? So people always think that like, oh, oil can never go negative and bad things cannot necessarily happen. But in these kind of black swan events, you do have this risk. So all that to say that there is a pretty good chance that Bogdan's bot can survive in the next period, just because oil's in a reasonably solid spot. There is political instability to a certain extent. However, if we were to enter a prolonged downtrend, let's say Texas all of a sudden decides to 20x the oil production, we could enter a bit of an issue, right? So you just have to be mindful of that. Now let's finally just run ourselves a visual back test to see how this would look. But before that as well, one little check is we need to see if he has any sort of risk parameters here, and he does. He is capping the risk level, and he should also be, there is some grid parameters here where you should be able to kind of adjust the grid to perhaps limit your risk. I'm trying to see if there's a maximum stop loss, max slippage allowed. I'm not seeing equity stop loss anywhere. Initial lots, grid maximum trades. Oh, here we go. So this is maximum grids. Yeah, like you could do the calculations here and see what your initial lot starting size is, your multiplier, as well as the maximum grid trades to see essentially what your max potential risk would be. I've done this before. You can make Excel spreadsheets that do the math for you, and you should do that just to kind of determine what your total exposure would be. If not, I'd also look at using a tool just to cap what your total potential loss would be, as you probably want to have some sort of equity stop loss for this style of system to kind of prevent those black swan negative oil cases. And as a final test, we'll run ourselves a visual back test to see how exactly it's running. There's nothing too crazy going on, so likely a hard-coded oscillator. Okay, so that is the video for today. It's a grid system, it's running oil. Eventually this bot will 100% blow up if you run it for 10 years just because oil is way too cyclical. And the core premise behind it, oil always going up, is simply false. Like, you can look at natural gas too, and every time that prices get above a certain level, there's a new innovative way to extract the resource which occurs. Like the shale revolution is an interesting anecdote here for those interested in energy markets. So because of that, it could work for the next little bit. It's a real strategy. He's not scamming you. There's a real system here. However, I'd be very mindful of how it performs going forward over a longer time horizon. So guys, hope you enjoyed the video. I'll see you in the next one, and take care.